Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Michael Riedl, who's CEO, and William Green, CFO at Team Internet. How are you today, gents?
We're good. How are you?
Right, so the last we heard from you was last week, in fact, that you've got a 10-year contract to operate Colombia's .co domain, but there's maybe more to you in your company than that.
Yes, that's right. And I would like to frame this win into the larger strategic context of the domain industry, which is the industry in which we've been active the longest. And the domain industry had 250 million domain names at the time that Team Internet, then still Centronic, IPO'd back in 2013. And today we are talking about a staggering 370 million domain names. So that's 120 million domain names increase, 10 million per year. And when we dissect that growth, the two large winning segments that have driven most of that growth are, on the one hand, the so-called new top-level domains, which are extensions like .xyz, .site, .online, .icu, and many others that have created almost 40% of that entire growth. And this vision to basically play in these new top-level domains was the vision on which Team Internet IPO'd back in 2013. And today we manage almost half of all these new top-level domains that have been created since 2013. The other big growth driver of the domain industry are so-called repurposed country code top-level domains, which are top-level domains that are typically for countries, like, of course, we all know .uk for United Kingdom, but there are a few that have developed a generic understanding. For example, .ai for the island of Anguilla is now interpreted as artificial intelligence. .io for the British Indian Ocean territories is now understood as input and output, or 1 and 0, so attracting a lot of digital companies. And last but not least, .co, which is for Colombia, but apparently also a shortcut for .com, and more companies who can't have the .com domain name that they want because the .com zone is pretty full, now opt for a .co. And very clearly .co is one of the most prominent examples of these repurposed country code top domains. And this is why we are super excited that we now have won a 10-year contract to run this top-level domain well into the middle of the next decade.
I suppose apart from the expansion in your area over the last years or recent years, investors probably want to know, this is we know it's an expanding area, but how much money is in it for Team Internet?
Billy, do you want to take that?
Yes, the financial impact until we actually get into the running the contract itself, the exact financial impact is shouldn't really be shared publicly, but it clearly has an accretive impact not only on revenue but on the earnings of the division. Our domains identity and software division has already grown, in fact 50% earnings growth experienced in 2024 compared to 2023 as a result of organic growth in the business combined with increased cost discipline. So when you add into that this significant new win, which will be generative of many millions of dollars in revenue, it will be accretive to EBITDA as well, and it just adds to the growth story and the stability and the certainty with which we can look forward to many more years of growth coming out of that segment.
Right. I mean, one of the things which is noticeable over the recent past is that, for instance, Team Internet, that the market has, for some reason, has taken a less positive view of the company. Is that because of competition in your area, or is it a company-specific thing in terms of the outlook for your business or your earnings?
Right. So the outlook for the earnings of our domain business is nothing than exciting. As Billy pointed out, we've increased the the EBITDA contribution of that business from 2023 to 2024 by $6 million. Is that right, Billy?
Yeah.
And with the current traction in the market, the earnings growth from last year to this year should be in a similar order of magnitude, and there is also good potential to continue a similar growth rate in absolute terms to 2026. So the domain business, which has been the stem cell of the group, is doing very well and is definitely not a source of a decline of the share price. What has triggered the re-rating of the company is the outlook on our search business, which has been an absolutely amazing profit machine from 2019 when we entered the business, when it was doing $10 million of EBITDA contribution, to 2024 when it was still doing about more than $50 million of EBITDA contribution. This year, due to changes that Google is imposing on the industry, we will see a certain trough in the earnings for that business and hope to recover relatively quickly over the next couple of years to get back to levels not dissimilar to what we've seen in the past. But with a generally nervous market, this has then led to a notable drop in the share price, and we now need to prove that we can actually turn this business back to the profitability that it once had.
I mean, just looking at your situation, in terms of the share price, it's back to where it was 5 years ago, which seems a little bit unfair.
Investors always advise me to not comment on price, but just very objectively, when we look back at the end of 2021, and 2021 we ended with, I think, $46 million of EBITDA.
Yeah.
And Billy, please keep me genuine if I misquote any numbers. Even this year, with a massive blow to our Google business, we will still do notably more EBITDA than then, and our share price is half the share price from that time, or even less than half of the share price of the time. So what one might actually consider whether the drop in the share price has been over proportional and a bit punitive, and potentially that inspires one of your readers to potentially pick up some shares at the current level.
Yeah, so moving back to Billy, maybe the change in the share price is due to people thinking of your business as basically it was like a cash machine before. It was a recurring revenue kind of business, and maybe the change in that apparent sentiment is the reason the shares have gone down so much. But it's still a recurring revenue business, right?
Yes, the change in revenue profile of the business over the last few years has led to rapid growth in revenue and profitability. The fact that the best performing part of our business over the last year, 18 months, is the domain segment, which is very steady, very high recurring level of revenue, very sticky customer base. That should hopefully give people increased confidence in the stability and the certainty of earnings forecasts, of delivering on numbers. So I think the more good news we have from our domains, identity and software segments, the more solace investors can seek while we're in the process of working through a product pivot that Michael referred to in our search business. So it's at least highly convenient for us that at a time when the search business is going through a change in product, the domains business is absolutely flying, and that will be translated into future earnings growth.
Well, we look forward to that. In the meantime, Michael Riedl, CEO, and William Green, CFO at Team Internet, thank you very much indeed.
Thank you, Zach.